Okay. So I was asking if we solved any question on CIT.
No, we didn't.
Okay. Let me share my screen. Okay, so I hope you guys can see my screen. So we did not solve any question. I thought we solved one question. Are you sure we did not solve any question? Well, I guess I feel like we solved a question, this number one and which other question? Or was it okay? Let us waste time then. Let's start with question one. Wazobia Nigeria Limited. I hope you cannot see my screen, it's not so tiny. Wazobia Nigeria Limited. Let's go through the question. Wazobia Nigeria Limited was incorporated in Nigeria on November 1st, 2016. The company had an authorized and fully paid ordinary share capital of 5 million shares at €1 each, and the company is an entity that started trading on January 1st, 2023, retailing engineering equipment. The first statement of profit or loss for the year ended December 31st, 2023, and revealed the following results. So we have the SOPL. So we have additional information as well. Then we have our requirements. On December 31st, the directors of the company agreed to pay dividend of 5%. Balancing charge agreed was this. Agreed capital allowance with the revenue was this. So compute the total tax liability of XYZ Nigeria Limited for the relevant year of assessment. That's what we want to do now. Computation of tax liability. Which year of assessment is this? This particular financial statement is for December 31st, 2023. So which year of assessment would it be?
2024.
2024 year of assessment. Thank you. So if you're not sure about the year of assessment, if you're not certain as to which year of assessment it is, just leave it blank. Okay? Leave it blank. You can write computation of tax liability for the relevant year of assessment. Don't put any year if you're not sure. Because if you put the wrong year, you're going to be penalized, right? But if you write relevant year of assessment, there's no penalty. So if there's a particular mark for that particular year, you would miss it, but at least you're not being penalized. Okay. If you write the wrong thing, it's like it's not okay to write the wrong thing, actually. So we are going to be starting with what our profit, net profit, right? Where is it? So we have profit for the year. Net profit, which is how much? I think there's a level of precision on this their naira. Okay. Okay. That's a 1,025. Let's put it in. That's 1,000. So then we'll add disallowed expenses. So when I want to do disallowed expenses, you first go to the statement itself. You go to the financial statement itself. Oh, that's one. Sorry. Okay. Now you go to the financial statement, go to the expenses aspect, and first check for expenses that are not allowed that are in the financial statement. Now let's look at the expenses one after the other. The first thing here is depreciation. Depreciation is a disallowable expense, right? So you pick depreciation. Depreciation. How much is that? 70,875. Right? Let me shift this to okay. So what else? We have directors' emoluments allowed, debenture interest, account credit fee, legal costs, salary, miscellaneous expenses. These things on the surface level, they are allowable expenditure. But if they have any information that we need to know, it will be given to us as additional information. So then we move to additional information. Move to additional information. So we have legal costs comprise the following. Number one, retainership. Retainership is when you want to retain a particular stuff and you have to pay legal costs for doing that. So that's like an allowable expense. Cost of issuing director service agreements. This one is like how can I say it? Contracts, service contract, don't pay. So the legal cost of doing that. Um So this like fall under two things. In some instances, it is allowed, like because I don't know if I remember saying it when we were discussing the written aspects of CIT that pre-incorporation expenses are not allowed. Pre-incorporation expenses are not allowed. So if we regard this cost of issuing director service agreement as a pre-incorporation expense, we disallow. But if we feel that this is not a pre-incorporation expenses, we allow. So now let me hear your view. What do you guys think about these expenses now? Do you think we should allow or disallow the expenses? This cost of issuing director service. You
Hello,
guys
my
are
your
not
screen is small. I can't even see the question. Can you please expand it? Probably you hide the participants and expand the question.
I intentionally did it that way so that we can see the question as we are solving the question.
Okay, probably I should go and check the drive for the question then. Okay, thank you.
You can zoom it. Zoom your screen. You will see it will be clear.
I've zoomed the same thing. I'm using phone, so let me go and check. Maybe I put that question in the drive. Probably I'll just go to the drive and pick it.
Yes, it's on the drive. It has been on the drive.
All right, thank you.
Okay. So guys, I was asking about your opinion about this. I want us to solve at least 2 to 3 questions today. Oh. So please let us try to speak up so we can move on. What do you think about the cost of issuing director service agreements? Do you think it's an allowable or disallowable expenses?
So I think it's disallowable expenses
Why?
because the director of the company they are not on the payroll of the company. I think if you are treating their own expense issue, at least it's you have to do withholding tax as in charge withholding tax on it. That is what I just understand.
Mm, well, I don't agree with your reason because number one, this money is not like their salary. It is the cost of like giving them the agreements. We have chosen you to become a director. Now, the cost of going to my lawyer, telling him to draft an agreement, and what I'm paying him is what we are talking about. It is not a salary to the director, right?
Okay.
So, any other opinion, please? Well, no opinion. Okay. So then, personally, personally, um, I'm going to treat it as a post incorporation expenses, which means I'm going to allow it because um you can should I say I don't want to use the word appoint. Okay, yeah. You can appoint a director at any point in the time of a company's life. It's not compulsorily before the company becomes incorporated. So like recently that this guy, Femi, becomes the head of the board of First Bank, right? It's not like they just brought First Bank to existence. First Bank has been in existence before Femi was brought on board. I don't know if you get me. So I will not categorize this as a pre-incorporation expenses. And for context, pre-incorporation expenses are expenses incurred by the company before they start business, before they start operation, before they become incorporated as a Nigerian company. So before you register your business, if you had some expenses that you had made, you are not supposed to allow those expenses because to tax personnel or to the tax authority, it's like you want to be saying a baby that you have not given birth to, you want to collect food for that baby. Yeah, who want to eat it? Do you get? So expenses that you incur before the company becomes like an existing company and is not those expenses are not allowable expenses. So I would categorize this as post incorporation rather than pre incorporation expenses. So now next one, cost of issuing ordinary shares. Cost of issuing ordinary shares. I would categorize as the pre incorporation expenses and disallow. Cost of issuing ordinary shares. So we have two 500. Okay, cost of insurance. Then let's move. Miscellaneous expenses. Cost of installing new machine. Now, this machine is new and it is an asset, which means it is a capital expenditure, right? And we know all capital expenditures are disallowable expenditure. But if you go by IAS 16, the cost of installing this new machine is supposed to be capitalized because it. Ayatullah, bring it. Sorry, please give me a minute. This was not difficult. All right, sorry for the disturbance. So we're talking about the cost of installing a new machine. And this cost is a capital cost, is a capital expenditure because it's supposed to be capitalized with the cost of the machine and not expensed. So we're going to be disallowing it. Cost of installing machine 3,750. Extension and partitioning of office apartments. So guys, what do you think about this? Expansion and partitioning of office apartments. Is this supposed to be allowed or disallowed?
It's not allowable because it's capital expenses.
It's capital in nature.
It's allowed.
Okay, the person that said is allowed, can you give me your reason?
I said disallowed, disallowed.
Okay. All right. Yeah, disallowed because it's capital in nature. Of office apartments 1.5. Staff party allowed. What do you guys think about staff party?
It's entertainment, Abi.
Entertainment, is it
It is
allowed?
not allowed because it's not
Ah,
related
yeah.
to the business.
It's not allowed.
It is not allowed. Well, I'm surprised that everybody think it's not allowed. I don't even have a single person
It is
that thinks
allowed.
it's allowed. Why do you say it is allowed?
No, the staff have worked for so many times during the year, so entertaining them should be allowed.
Well, actually, you are right. It is an allowable expenses. Like every company has end of the year party now. Every company, these people have worked. They have worked, and there's always a time in the year where the company will bring them together to celebrate them, and that's the staff party, right? So staff party is allowed. Is allowed. So cost of entertaining suppliers as well is allowed. They are both entertainment. But I think that's all about the expenditure of this particular question. Please, that person should notice our mic. Mute your mic, please. Okay. So that's all about the expenses. Then we also have less non-taxable income. Now, let's first go to our financial statement and go and check the income aspect. We have investment income, which has an additional information downward. We'll go there. Profit on sales of equipment. Is this a taxable income?
Yes.
Okay.
No, no,
The person that
It's
said
under
yes,
it will
why?
start under CGT.
All
No.
right. Okay. So it is not taxable. Like he said, it is going to be under capital gains tax and not CIT. So when we sell an asset, the things that will be involved is our balancing charge on capital allowance and the capital gains tax. So under company income tax, we see it as a national income and what's it called? Um, capital, should I say capital income that has nothing to do with what the company's personal income, something like that. Sha. So we have profit on sales of equipment. 4,950. Okay. So now let's go to the investment income. Dividend from Nigerian company, is it taxable?
No, it's not taxable.
No, it's not taxable.
Why?
no.
The profit has been subjected to CIT.
No, it is not CIT that it has been subjected to.
Withholding tax.
withholding tax. It has been
Subjected
subjected
to
to withholding.
withholding tax, and it
So
is
what do we
giving you a
call,
net. So
yes, what do we call this dividend from Nigeria company? It's called a name.
Is it
And
frank investment income?
frank investment
investment
income.
income, yes. So it is an FII, and FII is not taxed twice. All right. So we have dividend. Dividend should be enough. 2,100. Please note that what is given in the question is what you should remove. Don't convert net to gross, please. If you are giving net, you remove net. If you are giving gross, you remove gross, okay? Don't convert. So, loan interest from Nigerian company, is it a taxable one? You guys are not talking again. Well, let me help you. It's
You know,
actually
capital.
taxable. It's taxable now. It's taxable. You have the gross amount here. So it does not mean that they have not removed withholding tax, but it is not FII. So even if you have removed withholding tax, you still tax it because it is not a franked investment income. Do you get it? So we have equal to minus sum of these two. Okay. So we have I just said profit. Do we have loss? No. We don't have any loss relief, right? No. But we have what? Capital allowance. We have balancing charge. Balancing charge. Which is how much? 2,740. Then we have capital allowance for the year. How much is for the year? 10,325. Restriction equals to 2/3 multiplied by the accessible profit, which will be this. So the restriction is higher, we go for the lower amount, right? Relieved equals to minus this equals to this. So we have balance carried down, capital allowance is 0. Then we have.
Please, ma, we are not following you.
You're not following. I'm coming there. Let me. Oh. Okay. So if you remember our format in the last class, we talked about the format. We have how many? Okay, before I even go to the format, how many ways? In how many ways can we compute our company income tax? Guys,
4 ways.
4 ways. So can we mention them?
Yeah, so we have the normal basis,
Normal basis,
we have the gross turnover basis,
gross turnover,
we have the dividend basis,
dividend.
and minimum tax basis.
Yes, thank you very much. So those are the 4 ways that you can compute your company income tax, and this is the normal basis, right? And how do you do the normal basis? It's simple. Just first you need to calculate your what? Adjusted profit. Màmá ṣe bí mo ní kò gbọ́mọ. Ẹ wá gbé jọ ìgbà wo ló kúrò kí ló já abẹ́rẹ́ tẹ̀ fún ìgbà tó kúrò. All right. Sorry, so sorry for that. Okay, so I was explaining the normal basis, right? What you do is to take your net profit as per your financial account. You add all the expenses that is disallowable under tax realm. So if the tax office does not allow a particular expenses, you add it back. I think we've discussed all the expenses that are not allowable. I think we've discussed all of that in the last class, right? Everything has been discussed before. You add them back. Then you check income that are what? That are not taxable. Income that are not taxable. You also remove them, so we will not tax them again. After that, you get your adjusted profit. After your adjusted profit, then you are going to adjust your loss. If you have any loss that is coming from the previous year, when you adjust your loss, you have your what? Your accessible profit. You adjust your capital allowance, then you have your taxable what? Profit. So your taxable profit that you calculate whether 30% or 0%, as per the new rule, and as per the old rule, we have whether 0%, 20%, 30%. Are we good? The format is here. Here is the format. Is in your is on the drive in this particular document. You get. So we have it there. Um okay. I'm in class now. Okay, so is there any question? We are not through with our stuff safe. I want to check. Okay. So the company is a big company. You can see the gross profit. Though we don't need the turnover, but for you to have this kind of gross profit, definitely you're a big company. So to calculate the tax liability, we already have a taxable income. So tax liability now. Tax liability. You have the company income tax, and this one is going to be 30% of 42015,000. Don't forget that we have a level of precision up. Oh. Please don't always forget. So okay, tertiary education tax. TET is how many percent in 2023? I think it's already 3%. 3% of accessible profit will be the same thing as adjusted profit because we don't have loss. Do you get? So of 49600. Okay, so we have 0.03 multiplied by 4. I don't think we need to do that. Just let me put it here. Okay. So our total tax is this. Total tax. Please, if you have any question, kindly let me know. Are we good? Is there any question? Are you confused?
Ma, please, my question is, please, can you go back to the question we are solving?
Okay.
That part where we have the gross profit,
Yeah.
the figure we are looking at, are we looking at the 140 or the 149?
14800.
Okay,
So
thank
this is the gross profit and not the turnover. But for a company to have 140 million as gross profits, definitely the company has more than 100 million turnover. Okay. So I guess we are good with this. The question B says that explain the other basis of assessing companies to income tax in Nigeria apart from the normal basis. I think we have done, like we just did that now, not so long. So the other basis that you'd explain would be which basis? Oh yeah, oh guys, other basis. Somebody just mentioned them not quite long.
Dividend basis.
I'm coming. We have dividend basis. So,
Gross
like,
turn
can you talk
capital.
about dividend basis? So, under dividend basis, like, how does dividend basis work? He said the question says explain. So, you have list dividend basis now. What is the explanation? Oh yeah, oh yeah. Nobody can explain dividend basis.
But let me try.
Okay.
So dividend basis, it says that when there is no accessible profit to tax on normal basis, then it will then be taxed on the dividend paid. Correct.
Well, you try, sha. The only thing you are sha correct about is that you are taxing dividend. The remaining is incorrect. But then, like she said, we are taxing the dividend. Why? In a situation where the company made a profit and then they paid dividend, but the amount of dividend that they paid is higher than the profits that they made for the year. Let me repeat that. The amount of dividend that the company paid out to their shareholders is higher than the amount of profits that they made for that year. In that case, then dividend is going to be taxed instead of the taxable profits. So this basis caused kind of a ruckus. Some people were complaining that why you do that, blah blah blah. What if we have a subsidiary that gave us money? What if we have retained earnings that we used from previous years? You've taxed retained earning before, will you tax it again? There was like controversy. Then I think Finance Act, I'm not sure which of the Finance Act, whether it's 2020 or 2019, I'm not really sure which of it. Then it came out to address the issue. So under this dividend basis, if we have retained earnings that form part of the dividend paid, you remove the retained earnings before you tax. Retained earnings is earnings brought from previous years. Earnings from previous years is retained earnings. And in that last year that we brought the earnings from, the earnings have been taxed. It has been taxed. So if you bring it forward to this year and pay that dividend and they not tax dividend, it's like they're taxing that money 2 times. So because of that, if the retained earnings is part of what they used to pay the dividend, you deduct the return. All this I'm saying is in your material. That means you guys have not been reading. Read you. Read, please. Hey Joe, say I'm begging you. Read you. Okay. So the other income as well. If you check the material, it's going to be there. So apart from retained earnings, the other income that if you see them that they form part of the dividend, you deduct them so that they will not be taxed. If someone is trying to ask a question, all right. So the other basis apart from these two, what other basis do we have?
The gross turnover basis.
Gross turnover basis. Okay. Gross turnover basis. So can you tell me about gross turnover basis?
Okay.
Let me give you an hint. It's similar to what we explained for dividend.
Okay, yeah, this place, the Nigerian Revenue Service, they has the power to assess and charge a company to tax based on fair percentage. But I don't know
Okay.
why.
Why does it sound like you are reading it from the material?
No,
Are
I
you
already jot
reading
it down.
it?
I
Okay.
jot something down on it.
All right. So you are right actually. So in case where number one, the company does not have taxable profit. Number two, in the opinion of the authority, they feel like the taxable profit that this company is bringing forth is a lie. This company is more than this. They're expecting you to bring forth 500 million as taxable profit. You are bringing 50 million. The difference is too much. And they'll tell you that they reject this profit and they'll tax your what gross turnover. So they'll just pick a percentage from their head that they feel like is fair and reasonable to them. They'll multiply that percentage on your turnover, that is your sales or your revenue. Whatever that percentage gives you become your taxable income. You now do your 30% on that taxable income, right? That's the first turnover base. And the last basis that we have is what? Yeah, our last basis. Minimum tax basis. Okay. So minimum tax basis now. It's just like the name connotes now. Minimum tax. The minimum tax that the company can pay. So you pay minimum tax when your normal tax liability, like this one that we just calculated here, if you calculate minimum tax, and the minimum tax is higher than this money, the company is mandated to pay what? Minimum tax. But there's a caveat. Companies in their first 4 years of operation are not required to pay minimum tax. That's why we did not calculate minimum tax for this company. Remember that this company, this is their first year of operation. So regardless of whether you are a small company, you are a large company, for the first 4 years of operation, you are not expected to pay minimum tax, right? Okay. So, and what is minimum tax? Can somebody tell me the formula? Yeah. Guys, it's less than 100 days to your exam. Hey, and CIT is a very important part of the exam. I don't understand you, this guy, that you're silent. You guys, you're supposed to be fighting for attention. The class is silent. I don't understand what is happening. Is it that you guys don't understand the teaching, or you guys are too busy to check your notes, or what?
My formula for minimum tax.
Sorry, please, what's the question again?
I said the formula for minimum tax.
Minimum tax. That's 0.5% of the gross revenue.
Of gross revenue.
Yes,
You
ma'am.
have not finished, you.
Ah.
You have not finished, you. What is FII?
Frank investment income.
Thank you. So that is the formula. Don't tax frank investment income 2 times, so you have to remove it before you calculate your minimum tax, okay? All right, so that's it for question number 1. Any question before we move to the next thing? Any question? So guys, I want to pray. So I'm giving you, let me check the question. Kokos Nigeria Limited. We did this question in less than, how many minutes did we use? I don't want to know. I shall give you 15 minutes. 15 minutes, guys. You guys must do something new. At this point, you snap your note and you send it to the chat box. What's it called? Everybody must do it. If you have a question.
I have a question. I'm looking at our notes now.
Okay.
It said 0.5% of gross revenue minus FII. Now I'm seeing another one based on financial 2021. It's saying 0.245% of gross revenue less.
0.25% is for January 2019 to December 2021 years of assessment to cushion the effect of COVID-19. It's only for that particular time frame.
Okay.
So if your question
so
falls in that time frame, you can use 0.25% to help the company to minimize their tax liability.
Okay, so if they give us any question now, we have to consider the years to know which one to use.
Yes. If you use 0.5%, you are not wrong. But remember, this is advanced taxation. I told you, you guys are seen as professionals, as tax consultants. So you must think ahead and you think like a tax consultant. All tax consultants will do things that will minimize their client's liability. So if there's an option to pay lower tax, don't give your clients option to pay higher tax. Do you get? So be expected to think out of the box.
Okay, thank you.
You're welcome. So let me put the question, just that I cannot, the question, how can I say it? You guys have the material now. So number 2, please try it. By 5 o'clock when I get back, we are going to solve it. I want you to try it. I want you guys to ask me question when I get back, because lack of question means you guys have not tried anything. Okay. Agreed. Oh yeah. Favor, did you just join the class? I gave a classwork. That's why I muted myself. Guys, how far? Are you guys almost through? Okay. Taxable profit. Oh, let me clap. I'm giving you like audio clap. Well done, Olajumoke. Okay. So anybody else? Did anybody else make the timeline? So let me see the requirements. Adjusted profit, income tax liability. Okay. So you gave us taxable profit, you gave us TT. Then you said it's a small company. Okay. Okay, let me check that. Okay, you classifying it as a small company, you used the new tax act. Don't use the new tax act, please. Using the old tax act, this company is not a small company. Besides, what is here is the gross profit and not the revenue. If gross profit is 89 million, I bet revenue is more than 89 million. It's probably around 100 million. I don't think they give us revenue. They did not. So I would classify this company as a large company. Okay. Okay, so let's do it. Any other person? Is it only Olajumoke that was able to do this? Because we don't have time. Let's solve this and see if we can solve one more question. That will make it 3 questions today. Any other person? No, no. Okay, okay. Hold on, hold on. So let's solve it. Kokos Nigeria Limited. Kokos Nigeria Limited is a private limited liability company which has been in business successfully for many years. The following is the summary of its profit or loss account for the year ended December 31st, 2024. So we have the SOFP. Okay. This is their income. Hope you took note of it. Then we have additional information. The loan interest shown in the profit and loss account is the interest on loan to a friend of one of the directors of the company. The friend is very useful as a link in the procurement of a lucrative contract by the company. Donation, capital. Okay, okay. So now let's solve. Hi, give me. Yeah, take this. Okay, so we have Kokos Nigeria Limited. Kokos Nigeria Limited. So the first thing is to computation of adjusted profit for 2025 year of assessment. Okay, so Nira, we're cutting 1,000, cutting 1,000. So we have net profit. How much is the net profit? 50,000.
50,000.
Okay. So we had disallowed expenses. So let's go from the financial statement itself. Audit fee allowable. Loan interest. We have an information on loan interest. Let's go back down there. So it says that this loan interest, please that person should notice our mic. The loan interest is the interest on loan to a friend or one of the directors. So you gave one of the director, the person gave you a loan, and they don't even understand what they are trying to say. But whether you are giving the person loan or the person gave you a loan, it is a disallowed expense because number one, this connection is like it's showing a related party, that is a connected person. So the person gave them a loan and they are removing the friend is a very useful person. I don't even understand what they're trying to say, honestly. But what I can get from here is that the person is like an insider party that gives them information and give them like they are able to get contracts through this person. So this loan is actually not a loan, to my perspective, is nothing but bribe. You get. So we are disallowing. 400. Next one, bad debt. Is bad debt an allowable expenditure?
Yes, ma.
All right, yeah.
Specific one.
No, that's for doubtful debt. That's for provision for doubtful debt. Bad debt is an allowable expenditure outrightly. Bad debt is allowable. So when we have provisions for doubtful debt, that's when we now be talking about general or specific. So we have general expenses, carriage, lighting, salaries, rent, repairs, staff welfare, telephone postage, motor running, traveling, donation. Well, I think this donation would have an additional information. So now we have additional information, bad debt, employees loan written off. Is this supposed to be allowed?
Yes, ma.
Why? Oh, why do you
Don't know.
think it should be
I don't have any reason.
allowed? Well, it is not. Why? This company is not a loan company now. You are not a microfinance bank. Why are you loaning employee? Now the person carry your money, you now want to write it off. That authority does not know your business objective to be giving of loans. So it is not allowable. So we have employee loan. That's 120. General provision. Ah, this thing would have a mistake. General provision should have its own money specific. I think I corrected this stuff now. How come I'm seeing the same mistake again? Um, Let me try to open the word version. What is it? Okay, sorry. Let's check the word version. I know I corrected it. I just don't know why we have the uncorrected version. Yes, I need my glasses. Let's continue using this word. Oh, but then I have to. Oh God. You guys should be able to see it like that. Okay. You can see it now.
Yes, we can see it.
So employee loan, general provision. We already said general provision is disallowed. Something we just discussed right now. General provision, which is what 100 naira. Specific is allowed. Debt recovered, of course, they are going to like if you just like no bad debt is an allowable expenses. Just like they have allowed you to deduct bad debt. When you recover that debt, it's going to be taxed, which is the reason why this one is being deducted. So we are leaving it like that. So now general expenses are made up of sundry expenses. The only wrote here that it is allowable.
It's allowable. Yes.
Luncheon vouchers. This one is for everybody. Your staff has to eat now. Allowable. Subscription to trade. This one is like a necessary thing for the company to exist. So of course it's going to be allowable. You are subscribing to your trade now. But this
Yes.
social club, they did not beg you to go and join any club. It's going to be disallowed. That's 96. Printing, legal costs, lease on new premise. Lease on new premise is how can I say it? Is it like should I say capital expenses or
It's,
how
it's,
do I
dis- it's disallowable expenses.
yes, it's disallowable. I'm just trying to explain why
Okay.
it is disallowable. So just it relates a lot to capital expenditure.
Expenditure.
When we have lease, there's a way we pay about how there's an IFRS for lease now. Is it 16 or so? I cannot remember the IFRS that covers lease.
It's
So
IFRS 16.
eh, it's changed. So you add up everything, and we have the way you treat it under IFRS 16. So it does not fall as an expenses, rather remittance 120. So customers claim on defective goods. What do you guys think about this thing?
Should be allowed.
Why do you think it should be allowed?
Well, I can't really figure it out, but I think it's disallowable. I mean, it's allowable expenses.
Okay. So any other opinion?
It's connected to the business, ma.
Yes, it is connected to the business. So what happened is that they sold the customer a bad good, the customer sued them and they had to pay what for damages. Um so yes, it is an allowable expense because of course you should be careful, you should not sell bad goods to customer and be incurring unnecessary cost. But this one is not something that is their fault, right? So we move. Repairs and maintenance, decoration of new premise. Is this supposed to be allowable?
Allowable.
It's
Why?
disallowable. It's disallowable expenses.
It's a capital
Why?
expense. Should be
Yeah,
disallowed.
good.
It's disallowed.
Everybody should be putting their reason to. If you think it is allowed, why? If you think it is disallowed, why? Somebody said it's a capital expenditure. I think I had that. So any other reasons? I guess
Repair decoration of new premises is allowed, where repairs to plant and renovation of old factory may be disallowed.
Oh,
okay.
it's disallowable expenses
Why
because
did you allowable?
because the whatever cost, I mean, the expenses is going to be capitalized because it's going to add to the premises beautification, sha.
Decoration of new premise is different from you renovating or putting the premise in a usable position.
Is the position okay?
It's like when Christmas comes and when you want to do bloom, all these things. Do you get?
Though if
Have
it is to advertise the product of the company, so it can be allowed.
Okay. So let me try to speak a little bit on this.
Okay.
This particular decoration of new premise is subject to your personal opinion because where I took this question from, I cannot even remember whether it's past question or be the material. I cannot remember. I
Okay.
think I saw when I stopped it personally, I did not disallow it because I believe it is an allowable expenses. But in their solution, they disallowed the item. Personally, I don't see any reason why it should be disallowed because if the premises is decorated, it's probably doing a celebration, maybe Christmas or New Year or happy customers week. Those things that the company would want to decorate. And this thing is it's still to attract clients, to make clients know that they care, they know what is going on around them and they actually care, right? It is not a capital expenditure because it does not add to the value of the company.
The
If you
company.
like decorate the company 100 times over, it does not change the value of the company. It does not increase the useful life of the premises. Do you get?
Yes.
So let's come to a consensus now. Should we follow their solution and disallow, or do you think it's an allowable expense?
It's better we
It
follow
is
their
an allowable
solution.
expenses.
I think it's allowed.
Ma'am, I think why is going to be disallowed? Assuming they put decoration of new premises, let's say for AGM, it's
Uh-huh.
connected to business.
Uh-huh.
But
It's
here, it
specific.
wasn't
It's not
specific. It
specific.
was general. Yes, ma'am. Mm.
Okay. All right. Then let's go with their solution then. Decoration of new premises. So in the exam, if you have something like this that you think might have different views from different people, you
Okay.
go with your view, and after you have finished the solution, you put a note stating the reason why you disallowed or allowed that particular expenses.
Okay. That's good.
Do you get? So you are like telling the examiner your view, and when you write it, you can just put it maybe in front. See note kinikan. Do you
Okay.
get? So they know
Okay.
that you have an explanation as to why this thing is there or why this thing is not there. You are giving your own perspective. If you are lucky enough, the person marking your script might agree with you and give you your mark. So repairs to plants is an allowable expenses because it is a repair.
Liable.
is allowable. Renovation of old building is disallowable because it's a capital
Disallowable.
expenditure.
Yes.
Is renovation, like you are increasing the value of that building or its useful life. We have 340. So now let's go. We have already disallowed this loan. Donation. Donation to political party, is it allowed?
Disallow.
Allow.
Allowed. They don't ask you to be doing PDP, APC parties. So we have 300. Royal Elite Club, uncle.
Disallow.
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 How much? 500. Boy Scouts,
Allowable expenses.
Allowable.
allowed. Society for Blind,
Allowed.
Allow.
allowed.
Allow.
Is allowed. Okay, I think did I send the list of allowable donations to the group?
No.
Did I?
No. No.
Eh,
Maybe you can help us send it.
it's very long. Oh, you just read through and hope you remember whenever you need this. Let me see. Do I still have it?
Rick, help us with it.
I'm trying to check right now, so I'll not forget. Ah, don't have it.
Political parties is 500. Though. It's not 500 on Sunday.
It's 300.
It's 300.
I can't find it again, but let me ask somebody that might have it.
Okay.
So it's like 3 pages. Just skim through it.
Okay.
Okay. If the person should send it, I'll send it to the WhatsApp group. I'll try to look for it because it's important that you have it. Okay. So I
Thank you.
think that's all about expenses. Let's add it up. Then we have the non-taxable. I think some of the revenue are being come then non-taxable. Okay.
And that's dividend.
Less non-taxable income. So we have profit on sales of investment. Do you think it should be there?
No, should be under capital gain tax now.
It's not there, yeah. $96. Then dividend 2,000. Addition of the two, but we are lessing, don't forget. So we have our adjusted profit.
Ma,
Yeah,
the dividend, I
yes.
thought we are only lessing the one that is net. This one is gross.
No, I said if it's net, you less. If it's gross, you less. Don't change it from net to gross. You less whatever it is that is given in the question.
Oh, okay, ma.
All right.
Thank you.
So that's the adjusted profit. So the question B says income tax liability. So you start again. Kokos, Nigeria. Okay. See all these things that we are writing. Eh? I know you see like, okay, the Wala is too much. You are wasting time. Please don't see it like that. The one mark that this thing can give, you can move it from 49 to 50.
So it's better to repeat it.
Repeat it, please.
Okay.
Write it again. You get it. It who does not cost you anything to rewrite it. And I also want to talk about how you can like manage your time in the exam. For advanced taxation, the exam questions. Okay, let me finish this particular question, then we'll talk about that. Please just remind me so I will not forget.
Okay.
So income tax liability, we start with our adjusted profits. Adjusted profit. So equals to what we have here, right? So do we have any loss? I don't think there's any loss. No loss.
No loss.
No.
But we have capital allowance.
Yeah.
Yes.
Capital allowance for the year 3074. So we have restriction, which is equal to 2 over 3 multiplied by this will serve as our accessible profit since there's no loss. And this is higher. Definitely the one we are relieving is the lower of the two. Relieved will be equals to this same figure. Okay. So capital allowance brought down can be carried down then will be equals to 0. In our taxable profit equals to this. Person that did it is the person correct? Olajimoke.
No ma, no ma.
Oh, but you are close, right?
Yes ma.
I guess you cannot tell where your mistake is.
Yes ma.
So, sorry, I have a question.
Okay.
This restriction, I don't really understand where it's coming from.
Remember that in capital allowance, your capital allowance that you are going to relieve must not exceed 66 to over 3% of your accessible profit. So that's what we are checking here to see whether this money is more or less than 66 to over 3% of what accessible profit.
Profit.
So 66
Okay.
to over 3% is the same thing as 2 over 3 outrightly.
Yes.
So that's what we just did. So the lower of the two is what you are going to relieve here. Assuming this one is around 2 million or be 2,000, you relieve 2,000, you carry forward 1,074 naira. Do you get? But since this one is the
Thank
lower
you.
one, this one is what I will relieve.
Okay.
So now this company, remember that this question, the new Finance Act is not yet out, and I believe that it is not testable in your diet. When we are talking about NTA and NTAA, Nigerian Tax Act and the Tax Administration Act, is until the next diet that is testable. But the remaining, the first two, the one that is brought forth the Nigerian Revenue Service, or those ones have been since last year. So of course they might be testable, right? But so I'm going to be following the classification of company based on the previous rule and not this new rule. So now this company that is having gross profit of 94 or 89 million definitely has a sales that is more than what 100 million. So I'll be classifying
No.
it as a glass company and not a medium company. Therefore, CIT is going to be 30% of 50,291. So equals to 0.3 multiplied by our figure here. So you just add 000 in your note too. Okay. So we have TET. So this year is also a recent year. 3% of 5365 onto 3. So equals to total tax liability now. Total, please, if you have any question, kindly ask. So now for this company, they said that the company has been in existence for a very long time. Abi,
Period.
it means
Yes.
that the company can be subjected to what?
Minimum tax.
Yes.
Yes. So now minimum tax for this company is going to be the what? 0.5% of What is their gross turnover? We don't know their gross turnover, but we shall know gross profit. So we use that one. 89,694,000. Less, remember that we have frank investment income there.
Yes.
2 million.
1,000.
Okay. So it's going to be equal to, let's just wait here.
26.
0.5% multiplied by open bracket 89 694 minus. Okay. So
Hello?
yeah, I can hear you.
Okay, sorry. What is the basis of calculating this minimum tax?
That's what we talked about here.
Okay.
0.5% of gross revenue less frank investment income.
No, I mean in the question, are we going to be asked or we just compute it whenever we are
They,
doing
they
this
will
type of
not ask
question?
you. They
Okay.
will not ask you. You be the
So,
one to put and compare.
okay.
So at this, I don't know. This is 438,000 because I did not. No, I did not. What's it called? I did not put in thousand for this one. But remember that this one is quoted in thousands.
Yes.
So this is 60 million, but this is 438,000. Which one is higher? This one. So then you write it there. The company is expected to pay what? Kokos Nigeria Limited is to pay 16,688,000 as tax. You get? If you like, you can explain that's the reason because it is higher than the minimum tax. Or you can leave it like this. What they need, they already know it and they already have it. You get? But you can just write this there. You never can tell maybe to any additional mark. So that's it for Kokos Nigeria Limited. Any question?
I have plenty. I've been raising my hand since. In fact, my hand is
Okay.
paining me.
Sorry, I did not check. Oh
Okay,
yeah, ask.
so I have two questions. Number one, I wrote advanced class diet and I feel woefully. I scored 14.
Wow. Sorry.
It was my first attempt, and I just attempted only company income tax and petroleum. So I know that my problem with everything we have been doing now is my company income tax. What
Okay.
to when I know what to disallow. Now I know some things that you disallow rent and then you disallow, but some things, when do you know when to disallow this, or some things are not written in the book clear and plain that I'm saying that we are disallowing. My problem is, how do you know that this one you need to disallow it? Number two, minimum tax. When do we know whether we are going to compute minimum tax in addition to our CIT that we have done, or we are going to compute gross whatever that other one, or dividend basis? When are we going to know whether we are going to compute the other one in additional?
All right. Let's take your question one after the other. So about the allowable and disallowable expenditure. First, you have to know that it has to be really for the business. Number one, like, are you doing this for the business? And there are some things that guide some expenses. For example, like I said, if the company give out gifts for customers, it has to be a branded gift. As long as the gift is branded, it is allowable. That is, you have the company's name on it. It's allowable. Nobody can change it for you and say, oh, it's not a gift, it's a bribe. No, it has the company's name. You can't bribe somebody when the bribe is traceable. You get it. So it's a gift and it has the company name, it's an allowable expenses. But if you see the word unbranded, it's disallowable because it means that what is the evidence that it's this company that actually gave this person this? They can easily change it and say, oh, we're not the one that gave the person, you know. Then one thing I also tell you about taxation is that there are some items of expenses that they will intentionally put there. Maybe they'll put on English that you don't understand, and they know that majority of people solving that question will not even know the meaning. Then you'll be left as to Are you allowing or disallowing? Or it might not even be a matter of English. It might be something like everybody will have difference of opinion. Like I said earlier, think about it well. What advantage is this expense to the business? Is it business oriented or is it personal gain? Like whatever decision you now come to, whatever decision you come to, write it as a note under the solution to that question. So the person can see your reason for allowing or disallowing that particular line of expenditure. That's one thing I've learned from the person that taught me taxation, right? So you let them know. You cannot know all the allowable and salable expenses. You can never. You always come across an expenses that you've never seen before. It always happens. So it's up to you to now sit down and think. Oh, if you see this as an allowable expense, why? That's why you see I always ask you why. If you see this as disallowable or allowable, why? What is your reason? Your reason has to, make sense. You share your reason with the examiner, and it's up to the person to see whether you make sense or not. Right. So that's it on the part of allowable and disallowable expense. So for the other basis of computing company income tax, first know that they hardly ask for other basis. It's usually the normal basis. And if they do, like the question we first solved, they ask for other basis, but they only told you to explain. You can either use minimum basis. Minimum basis is, I will always advise you to use minimum basis, except, I told you that in the first 4 years of a business life, they are not going to pay minimum tax. So, first 4 years, this one, they are not going to do it. And in this place now, this question said we are supposed to write it out that we did not calculate minimum tax because the company is in the first 4 years and it's not supposed to pay minimum tax. Oh, you can cost it back. So that one examiner that did not even remember what it's supposed to do will not come and call us down for not putting minimum tax. I don't know if you get what I'm trying to say. So we are supposed to, well, let me write it. Let me write it. I'm not just say we are supposed to. So minimum tax is not computed because the company is in its first 4 years of operation. So the reason why we skipped minimum tax in this instance. So for minimum tax, you should always do it as long as the company is not in their first 4 years. For dividend basis, there will be an indication. So like for this question, if you want to do dividend basis, we have the dividend because they wrote it here that directors agree to pay dividend on what? 5% of the shares. If 5%, all you need to do calculate the dividend that they want to pay and do what? 30% of the dividend. That's all. There'll be indications. There'll be indications. You want to do. So if you want to explain this one now, you can calculate it for them to see. But you can never use gross turnover basis. Why? It's in the discretion of the Nigerian Revenue Service. They are the one that would give the company a fair and reasonable percentage. It's in their discretion. You cannot think for them. You don't know what they want. So you definitely cannot tell the particular percentage that they will give the company. I don't know if you get me. Are we good?
Yes, ma'am.
Yes, thank
I
you.
have a question. I don't know if you're done with that of Olaide.
Yeah, I'm done.
Okay, so my question is between the total tax liability and the minimum tax, which one are we taking, the higher or the lower?
The yeah. Let me explain something to you. For any payment that the government or should I say the tax authority want to collect from you as a taxpayer, it will always be the higher. If it is government that is collecting money from you, it will always be the higher. But if it is a form of relief or something, it's going to be the what? Lower. Something that will reduce your tax liability. It will always be the what? The lower. I hope you get that hack like that. So government wants more from you, but want to give as low as possible to you, something like that.
Okay, so when we calculated this minimum tax, when
Yes.
I did 0.5% of the 89,695, I got 448,470. And we've not subtracted the FII from it. Don't know if you can look at it again.
Okay.
Yes, I got.
Let me use the normal calculator there. I just don't need the calculator has percentage. So we have 0.5%. Ah, it's not what is 0.5%. That would be 0. How many zero? Is it 20 or 30?
Two
So if
zero
you
zero. Yeah, yeah, it's correct like this 10
okay,
times.
if we remove 2 million from this, how much do we have? That would be 87, right?
Okay. Okay, we are going to subtract the 2 million from it first. Okay.
Yes. 694 133. It's correct now. What did you say yours was bringing?
I got where I've seen where I made a mistake. Thank you.
Okay. All right. Any other question? Let me see the question that will solve next. Now, we have done simple,
Ma'am,
simple question.
excuse me, ma'am. Ma,
Okay.
please, I'm still in doubt about the percentage you use for the CIT because the net profit they gave is turnover is gross. They didn't even put net to think of
No,
that they have removed the expenses.
the gross profit is gross profit now. It's not revenue.
Why do we use 30% instead of 20 since their profit is 89 million?
The profit is 89 million. But remember that it's gross profit and it is not revenue. A company that has a gross profit of 89 million surely has revenue that is over 100. No, gross
Okay.
profit is where you have already removed purchases, you have removed cost of sales.
Okay, yeah.
Ehen. So for the company to
Okay,
have
ma'am.
gross profit of 89 million, that company will surely have over 100 million revenue.
I thought we had to stick to the figure that we saw on the statement.
But the statement did not give us the revenue figure.
Okay, ma. Thank you, ma.
You get.
Thank you.
So
Thank you,
it's up to your
ma.
discretion to like guess what the revenue can be. And it's even unrealistic to think it will be less than 100.
Okay,
So
ma.
guys,
Thank you, ma.
let's do this example would take time. I'm thinking if you can finish it within 1 hour. We have to finish this class by 6:30 so I can prepare to break my fast. So you don't want me to faint. So what we'll do is this question one, practice question, shall I do assignment? Even though you guys will not do my assignment, I will shall give you assignment, shall I do limited. Go and do your assignment. Now let's do soft life. Now, soft life made me remember what I wanted to say. I told you guys to remind me, forgot. So now look at this question, soft life. It is a question number 1. And I think it was my diet. I wrote November 2023 diet. I wrote November 20. That diet was, I don't even know. I actually did the exam and I left. I was not even sure whether I would pass or not. But thank God, I think I got 54 or something. I got Oriyomi pass mark, but at least thank God. So now, I want us to see something. This is the first page. Now let's count the number of pages. We have 1, 2, 3, 4 pages for just one question. Guys, remember that we are in professional and we are not just in professional for anything. We are seen as professionals. We are not just like, it's not just by mouth. We are seen as professionals. If you get into the exam hall and you realize that question number 1 is causing you anxiety, maybe because the question is very long, first thing first, check through the question. Is this something you can do, like on spot, with your current level of thinking at that particular when you first start the exam, your body will still be shaking, and when your body is shaking, the level at which you think will be below your normal level of thinking. If you think at 80% before, that 80% will come down to like 60%. As at that particular moment, you still be shaky and anxious. So you leave it till you feel like you can come back to it and your brain has settled. I don't know if you get me. If it's something you are sure you can do, you can start. Question number 1 will always take time. Number 1, it will take time. But if you know what you are doing and you are sure that this question is something that you can work on, start it. If not, please don't start with question number 1. I beg in the name of God. Even if you think you can do it and you started it and you can see that this thing will take my time, or you made a mistake that if you say you want to go and correct that mistake, it will take your time. I beg in the name of God. Leave like 5 pages. Go to a question that you are sure that you can do. I usually advise my students to start with capital gain tax question. Don't worry, we'll do capital gain tax after this topic. Capital gain tax can be tricky, but it's very simple. And it always come out every diet. You cannot miss capital gain tax question. It's always be there. Do your capital gain tax first. Do other questions that will not take time and you feel like you know better. Then now come and sit down with this one and say, okay, me and you today, anywhere we stop with the idea. Question number one is attempt. Every question is attempt, but you must attempt this question number one, please. Because I have a student now. I'm talking about a real life example. She's my best student then. She answered those questions, do all of her assignments. I was expecting her to even, if possible, win prize. Only for her to be avoiding me after exam. But I found the situation very funny because I had high hopes, honestly. I had really high hopes for the lady. And when the result came out, I asked her in her DM, she did not respond. And anytime she see me, she'd be running away. So it was the owner of the tutorial that told me that she failed. I was like, no, it's not possible. Rose cannot fail advanced taxation. What did she do? She sat down with question number one. By the time she finished question number one, they had like less than 1 hour remaining. Kilo fair call, less than 1 hour. She wasted that time on question number one. She wasted and I told them the same thing I'm telling you this like evening. Please don't waste your time on question number one. First glance through it. If it's something you can do without wasting time, you know your strengths. Don't lie to yourself. Don't fat. Please don't lie to yourself. You know your strength and your weakness. If question number one is based on something that you are weak on, don't attempt it first. Go and do other things that you are sure that I'm still okay in this area. Go and do them. Then you now come back and come and sit with it and say, okay, me and you today with the idea. Don't do question number one first. Question number one is usually a trap. And usually it's very simple. But because the question is usually very long, it will take like 3 pages, 4 pages, 5 pages in some instances. You start to build up anxiety and you are scared and So go on those anxiety, go and use another question. Then now come back and gently do question number one. I promise you, it's usually very simple. I feel like it's intentional self. The intention is to do it so that you scare people. But please, when you see that question that is like 7 pages, 5 pages, don't be scared. It's nothing. Go and do things that will calm your heart first, then come back and sit down with it. You read line by line. Read first paragraph. What are they saying? Is there anything useful for me? Yes. Knows what is useful. No. Let's go. Move to the next paragraph. Read it. Is there any useful thing for me in this paragraph? Yes. Note it down. No. Move. Do you get? Just calm down, read it one by one and see, is there any trap there? Is there anything I'm supposed to note? I don't know if you guys get what I'm trying to, if you get my hints. Blessing, your hand is up.
Yes, ma. Ma, please, I want to remind you, the question we had, what we have already is different from what we used. You had to open your MS Word to get the correct one. I think when it comes to the bad debt, just for you to help and load the correct one, please, so that when we are going through it, we'll understand on the Excel sheet, ma.
I would work on that. So what I'll do is to re-upload it. I will re-upload it, sorry. I'll re-upload it to the drive. I'll delete the previous one, then I'll re-upload the new PDF. So when you see the drive, you see the new one by God's grace. So now, I think I've done enough counseling. Soft farm and agro allied limited. Okay, so this question is either my diet or the diet before my diet or the after. I'm not really sure. It's in between the theory of them. Now let's read. Please, do you guys have any question before we proceed? And hope you guys got my points on how to treat your exam question. So if you know what you are doing, but you are not being smart about how you answer questions, it might affect you. You have to know and you have to be smart in answering your question. Okay. So Soft Farm and Agro Limited, a subsidiary of Emperor Agro Incorporated, Italy. So the subsidiary is in Nigeria, which is Soft Farm. The parent is Emperor Agro Incorporated, is a non-Nigerian company and is in Italy. Note that. was incorporated in Nigeria in January 2018. That is, Soft Farm was incorporated in January 2018. Soft Farm and Agro Limited, they produce palm kernel for domestic use and export to European markets. The managing director of the company has just received a letter from head office, that is the parent company, of an impending visit occasioned by poor business performance, that is below the group return of 25% since commencement of the business, in spite of financial and technical support rendered by the parent company. It would be recalled that in January 2022, the parent company granted loan request of 100 million to Soft Farm and Agro Limited for business expansion. So the important thing in this paragraph is what? The loan. They granted the company a loan. Note that, and we clock that. The board has scheduled a special meeting for next month for the consideration of the financial report of Soft Farm and Agro Limited for the year ended December 31st, 2022, and review of past financial reports and tax assessments. As the newly engaged tax consultant to the company, you have been invited to be part of the meeting for the purpose of providing professional opinion on tax-related issues that may arise. To help you prepare adequately for the meeting, the financial accountant has been directed by the managing director to make available to you the financial statement for all the period under review, books of account, returns filed with tax authority, and other supporting documents. You noted from the plenary review of the financial report for the year ended 31st December 2022 an item that requires further discussion with management of the company. This issue is in respect of interest paid on loan obtained from the parent company. Remember that the parent company borrowed them 100 million. So they paid interest on that loan. And you guys have done kini now. What's it called? The BEPS.
Transfer price.
There's transfer pricing, also in transfer pricing, also in BEPS. So what can you say on interest paid on that loan?
Sorry, are they supposed to collect the interest on the loan?
Of course,
I don't
the TV is
being
loan.
their
You know that
parents.
loan now, they'll collect interest. So in regards to transfer pricing or BEPS, what does this loan have to do with, why did this loan pose an issue? Oh yeah, you guys are tax consultant to remember. Put on your tax consultant hat.
I think it's a loan to a connected person, so they believe it may be done below the current interest rate or something.
Okay, you are right. Half right. It is a loan from a connected person. That is very correct. That is very, very correct. So they got a loan from a related party, which is the parent company, right? So now there's more to it. This loan can serve as what? Under BEPS, what can this loan serve as?
It can serve as a means of evading tax, in a less tax,
Profit shifting.
Exactly.
yes.
Exactly. Because the parent company is not a Nigerian company. You are not shifting profit from Nigeria to Nigeria. You are shifting profit outside of Nigeria. Do you get? And what solution did the Nigeria authority impose on a situation like this?
That when the interest paid is more than 30% of the EBITDA. Is it that one?
Yes. What do you do in that case?
Okay, you should. Maybe you should charge the lesser one.
Well, yeah, you're right. You restrict the interest to the 30%, and you forward the remaining interest to the following year of assessment. You are very, very correct. Can you see what I'm saying about you analyzing each paragraph as you read it? So if you just read through bam and you do not note this thing, you might be affected. Do you get it? So now let's move. Also, we have the financial statement for 31st December 2022, domestic sales, export sales, other operating income, blah, blah, blah. We have all of these things. We still come back to them by God's grace. So, export sales, other income, repairs and maintenance, rent paid, blah, blah, blah. Then we have an information on the interest and other finance costs. In January 2022, the company obtained a loan facility of 100 million from the parent company. for the purpose of expansion of the business at a competitive rate of 12% per annum. The duration of the loan is what? 10 years. The company is expected to pay interest due for the first 3 years, while from year 4 to year 10, both principal and interest due are to be paid at the end of each year. The balance as shown in the financial statement is attributed to other finance costs and bank charges paid to domestic deposit money banks on various accounts operated by the company. So, what do you think we need this information for? Yeah, time is going.
Now we'll compare the interest paid with the 30% of the EBITDA.
Yes.
That
yes.
lowest
No, they did not give us the interest paid in figure. They only gave you what you need to calculate it.
which is the 12% of 100 million.
Yes. 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 So you be the one to know how you calculate your interest, you compare with EBITDA. Remember that they did not even give you EBITDA. You be the one to calculate EBITDA by yourself. Yeah, let's continue. Okay. General expenses. We have capital allowance. Shamali Pari share by. Oh my god. Have we not done this capital allowance before? Let me go and check our cap. Maybe we have done this before so we can. Oh my goodness. We have schedule of the prior year's turnover and accessible profits. So we have, they started business in 2018. They gave us turnover and accessible profit from 2018 till what? Till the previous year before this financial statement. Qualifying capital expenditure, oh my god, from 2018. Hey! Yeah, we're able to do this thing, right? Okay, let's start it, Sha. If you cannot complete it, we'll finish it in the next class. Abi? Well, let's start it. So, as the tax consultant to the company, you are to draft a report to the managing director of Soft Farm and Agri Limited in line with the provision of the SITA. The report should provide professional advice on a treatment of excess amount of deductible interest paid. So how do you treat that deductible interest? Number one. Number two, adjusted profit of the company. Number three, tax liability for all relevant years of assessment. They wrote it here that all relevant years of assessment and they put 17 mark. Somebody will now go and be doing tax liability for only 2023 year of assessment. Something mark because even if you are not sure of what to do, this 17 mark ought to tell you that there's something in this number three. So all of these years that they put here, you calculate tax for everything. That's what that number. That's why it has the word all relevant years of what? Assessment. Okay. So let's start from A. Treatment of excess amount. Number one is let us calculate how much is interest in itself. Interest on loan from parent company. So how much is interest? We have, let's go back to that paragraph. So 12% per annum. 12% of what? 100 million. So how much is that going to be? Equals to 12% 0.12 multiplied by 1, 1, 2, 3, 1, 2, 3. So that's 12 million. The interest amount is 12 million. Let's load in it. So now let's calculate our EBITDA. Calculation of EBITDA. Can somebody remind me what EBITDA means?
Earnings before interest, depreciation, and amortization.
The thing, what does it mean?
Tax, interest, tax, depreciation.
Any before interest, tax and
Depreciation and amortization.
amortization.
Yeah. Okay. So now let's go. We have earnings before tax first. you go and pick your. What we have here is net profit. So it's still earnings before tax. Check by this one tax not buying. So we have net profit. How much is the net profit? 104,560.
Try your screen.
Who is that? Oh,
And we
what's your
can't
mic?
see your screen.
You can't see my screen here. I'm still showing my
Yes.
screen. I don't know what happened. Oh.
Can see it.
We can't see
You
the
can
solving.
Maybe it's your network.
I'm showing the two. Okay, now we want to this net profit you're assuming is like profit before, profit after all of these things. Now I want to convert it to profit before tax, interest, excuse me, take a note. Profit before interest, tax, depreciation, and amortization. Who is that? Oh, kindly mute your mic. Oh, you are cooking sorry food, abi she no food, abi while you are listening to task. Okay, so now the first thing in the EBITDA says interest. So what we are going to be adding is what? Let's take it one by one. Interest. Interest is also known as what? Finance cost. Abi?
Finance cost.
Now, let's come here. Do we have interest? Yes. 15,600. 15,600. Okay. So after interest is what? Tax. Do we have tax here? You guys are not talking.
No, ma.
Are you sure?
Income tax provision
Income tax provision.
3,400.
What is
Is
there?
income tax
Income tax
provision?
23,400.
Is it a tax?
No, it's not a tax.
Okay, it's not.
See how I'm just confusing you people. You two, you are being
It's tax
confused.
now. It's tax.
It's not.
Why
It's
why is
provision.
it a tax? If it's tax, why is it a tax?
Okay, sorry, it's provision.
Hey.
It's not tax.
Okay, guys, listen. This provision, why do we have provision for tax? Why do we used to have provision for tax? The main reason is because we don't know how much our actual tax liability is going
Tax.
to be. So
B.
we are going to put a figure that we think will be close to our actual tax liability that will serve as our tax until we know the actual amount that we are going to pay. So that's why we have provision.
Yes.
Just like
Mhm.
an assumption figure. Yeah.
Yes, an assumed figure. So this is an assumed tax, and therefore it is tax, and we are going to add it back. Do you get?
Yes.
Please don't be confused, though. So how much is it? 23,400. So what else again? Depreciation. Do we have depreciation? Yes. What am I pressing now? Depreciation. So 38,
3240.
40. Do we have amortization?
No, ma.
No.
No.
Okay, let's add it up. Okay. So now this is our what? EBITDA. So now the rule says what? Restriction of interest on foreign loan equals to 30% of EBITDA. So let's just calculate it here. 30% of EBITDA equals to 0.30 multiplied by this figure. 54.5. Remember that we have quote to guys at the quote you in thousand. So you compare 54,550 million and 12 million. Which one is higher?
54,540 million.
So do we restrict the interest?
No, ma.
No, we allow everything since it's still within the restricted figure. Do we get it?
No, please come again.
So because this 30% of EBITDA is 54 million 540,000, it is
Okay.
higher than 12 actual interest of 12 million. So
Okay.
we allow all the 12 million since it is not above the restricted amount.
Okay. Thank you.
So remember that this question, you are told to write a report. Everything that we are doing is under what? Workings. Your report is your solution. Do you get? So you put like a page or 2 pages for report. Yeah, I think a page should be enough now. What are you writing? Then you start your workings. So this one now, we are going to conclude that the interest payment of 12 million should be fully deductible because it is still within the range of 30% of EBITDA, something like that. So if you want to write your report, your first paragraph will be thanking the company for like, should I say, taking your service or something like that. You have to thank them and you tell them that you received their request to shed light on some things. Then your next paragraph will now start with the solution to the question. Treatment of excess
Question.
amount.
Sorry. I want to ask a question.
Okay.
Let's assume that the 12 million is higher than the 30% we calculated. What will happen?
So let's assume this 12 million is 60 million and
Yeah.
not 12 million. Let's say 60
Yes.
million. And this one is
Yes.
54 million. What you do is to
Yes.
restrict the money to 54 million and the excess amount will be carried forward to the next year.
Okay. Okay.
And
Okay.
I think the
So
Thank you.
sorry,
maximum
ma,
year that can carry it forward is 5 years. Yeah?
Okay.
we are going to less
Yes.
that 60 million from 54 something. The balance will not carry forward it to the next following year. Is that what you are trying to say?
Yes, yes.
Yes.
Okay.
Okay. Oh yeah. So that's for A. I was explaining how you write your report. So the report is expected that you as a tax consultant, you have a company letterhead. So when you want to start your report, it's supposed to be like you're supposed to write address, your address, the company address. But if you're writing on a letterhead, your letterhead already has your address, so you don't need to write your address again. You start with what? You are directing the report to, let's say, the directors of the head director. You have to write the report to the managing
So,
director of farm.
sorry, ma. Sorry, ma. We are
Okay.
not. We are in the exam. We are not having a letter-headed paper. We are having the
You
script.
fetch a
Just
letterhead paper now.
give us. Just give us what we are going to do in the exam, please.
That's what I'm trying to explain to you, because if you start
Okay.
number
Thank you.
B, you cannot finish it. So I'm trying to use the time to explain how your report will be.
Will be. Thank
So
you.
and please guys, we cannot start B and C now, because if we start, we will not be able to finish it.
It's
And
true.
the assignment I'm giving you guys now, go and do capital allowance. This one you must do it too. You must do this assignment. The capital allowance, this one, date of acquisition, asset type. This capital allowance is what we will use to do C. So please go and do your capital allowance before next class. So next class we just do adjusted profit and tax liability straight. You guys, I'm going to hold you accountable for this capital allowance, so you must do it.
Okay.
So let me talk about your report writing here. Let me do this. Um, no, I don't want it to be left. I want it to be right. Okay. Now report writing. to write your report, it means that you have please somebody who is that person, mute your mic. Oh. It means that you have been asked by the company to do something. In this case, you are drafting a report to the managing director of such firm in line with the provision of SITA, and they want you to give them advice on the following, So now, like I said, you are expected to write the report on your letterhead. So the first thing is you are creating your letterhead. What is the name of your tax consultancy company? Me, I'm saying my name. My tax consultancy company is Faiz Tax. I'll be Faiz. Let me see. Faiz and Co. Chartered Accountant, something like that. Faiz and Co. Chartered Accountants. Kila spell it right. Accountants. Ìdí àyìn rẹ̀ àbí kí la fẹ́ pè ní let me put well, let me write ìdí àyìn rẹ̀ ìdí àyìn rẹ̀ that is coming to my head. Ìdí àyìn rẹ̀ Ìbàdàn Ọ̀yọ́ State. So this is my letterhead kìíní kan. Do you get? Oh, don't let me imagine that leave it like that. So this is then you can put your date here. Like we used to have date in letterhead. You can put it here, or you put it just like above the address. What's the date? Today is 22, right? 22nd February 2026. They will now come here. Who are we addressing this thing to? Managing director of which company? Soft Farm and Agro Allied Limited. Where is the company located? Oh, Lagos. Then reply. RE means response. Reply. Now, but we are on to the, what's it called? Top heading, what do they call it, of the letter. What your letter is all about. You have to form an heading by yourself that will comprise of what you are expected to do. Right? So I think looking at this requirements, treatment of excess dividend, adjusted profit and tax liability, reply. Professional, I would say professional advice on would that be okay? Yeah. Respond on professional treatment of interest deductible, adjusted profit and tax liability relation. Okay. So this is the topic, right? And maybe DSR will come before topic now. DSR. Let's put one more down. Now starts. Sequel. You can say sequel to the letter received by the managing. Remember that me, I'm just writing this thing for my head. You don't have to write it verbatim. It's just something similar to what I'm doing that you are going to write. Do you get? Sequel to the letter received by the managing director of Soft
Farm and Agro Allied Limited to shed light on the treatment of excess amount of deductible interest paid, calculation of adjusted profit and tax adjusted profit for 2023 year of assessment. Write it in full. And tax liabilities for 2019 to 2023 years of assessment. Below is our professional is the advice, Abi? I don't want to use the word advice. Opinion regarding these matters. That's another. Mo tẹ̀ ti gbàgbé pé mò ń kọ line kan. Oh, okay. Let me break it. It's too much. I will highlight limited. Let me break it from here. X. Okay. Then I'll come and break it here too. Okay, I think that's okay. Then you move to another paragraph. You now start taking it one by one. This treatment of excess dividend amount on the treatment of blah 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 blah, you write it off, you write this thing finish. If you know the Finance Act, or if it's, I think it was Finance Act, is that 2019 or 2020? I cannot remember. That brought forth this excess interest. So you now write based on Finance Act 2019, the interest paid to a foreign on foreign loan must not exceed 30% of what? Of EBITDA. Loan paid none have been granted by, you write the name of the parent company, to this company is regarded as loan by a foreign company, and they're subject to this particular law. Upon calculation, 30% of EBITDA gives us this particular amount, and the interest on the loan gives us this particular amount. You write the amount outrightly. So therefore, the interest does not exceed the restriction of 30% of EBITDA, and the total interest is therefore an allowable expenses. Finish that paragraph. Move to another paragraph. Adjusted profit for Soft Life and Agro-Allied Limited for 2023 year of assessment is this particular figure. Put into bracket. See workings 2. When we are writing this interest 2, when you write 30% of EBITDA, see workings 1 inside bracket. Then interest on loan 2, see workings 1, or you can call it appendix instead of workings. Appendix 1, appendix 2. Adjusted profit for 2023 of assessment, see appendix 3, 2. Tax liability for all relevant years. Tax liability for 2019 year of assessment is see appendix for 2018 year of assessment is, or you just add it for 2019 2020 is this and this into bracket, see appendix 3. We hope when you are finished everything now, we hope that all issues have been addressed in this report. Do not hesitate to reach out to us if there are any pending matters or Um, or any questions? Yeah, any questions? Another paragraph. Thank you. Then you put, what's it called? You can write. Is it yours faithfully that you used to write? You can write yours faithfully, but I cannot really remember what I did not put yours faithfully. You write your name. I'm Faiza Judgment. Write my name. Judge. Who are you? Tax consultant for Faiz and who chartered accountant. And that's it. We are done with. Please, did you understand how this thing I was not taught to? Most teachers don't teach it because they feel like but I feel like it is quite important. It's part of the mark, no matter how small. So guys, you can't see my screen.
Thank you.
You are welcome. Okay.
Okay, ma'am. Can I want to like ask a question.
Okay.
Okay, so I observed that most of the questions that are being asked under advanced tax is majorly on report writing. But I
Yes.
remember that while going through last diet question, there was nothing like report writing. So I was asking somebody, the person was like, even if they don't ask you to write reports, just know that you are going to write report. I don't know if that is true.
I had the same thing because I remember asking the person that taught me the same question too, and that was his response. But the diet that does not have any reports, wow, that's strange.
Yes, that's strange.
I've not seen that question, but I tried looking for it. I don't know if you can send it to my dear on
There
WhatsApp.
is report in it. There is report.
There is
It's
what?
for
There
question
is
one
report.
that there's reports, but other theory questions like section B and section C, there is no report.
Okay, they are theory questions. The ones that don't have a report are theory.
Yeah.
If it's theory, you
And,
don't need to write reports now. Maybe
and
there are two.
Some questions, some
this
questions are
petroleum oil and
sorry,
gas
can you
too.
be ready and run it, please?
The hydrocarbon, Abi.
Yes. But
For hydrocarbon,
they
I'm
don't
not really
normally ask us to write a report,
do
but I
report.
don't know whether we're supposed to write it or not. I
You know,
don't really
if
know.
if if you are not told to write report, it means that you don't know who you are addressing anything to, or
To
it's going to be hard
yes,
to tell who you are addressing the report to.
to yes.
Personally, I'll just stick to instructions, but I'll not lie. What the person told you is what my teacher also told you.
Okay.
Okay, thank you.
Thank you.
You're welcome. All right. If assuming this capital allowance is not 20 years now, I would say we should do capital allowance now before we leave. But the number of years in this capital allowance alone is scary. And please, guys, anybody that wants to do question of advanced tax, the person will not be lazy. If you reduce your advanced tax, you have to just put your mind and say, today we are doing this. See this question now is question number one. See the number of times we have used to do A. B now, the number of times that, because I've solved this question personally, and I tell you that it took time. It took time. Especially this capital allowance because it's the one that took the most time. It's the most annoying thing of all. I just wish I can copy and paste my notes. I would have to redo it on Excel. But we have to redo it on Excel. I cannot copy and paste my notes. That's the most annoying thing. And I think before you do, no, I already gave you assignments. This capital allowance as assignments. I beg in the name of God. Before you do capital allowance, go to your expenses. Let me even tell you yourself so you're not going to do nonsense. Repairs and maintenance. Repair of plantation equipment allowable. Repair to premises allowable. Expansion to warehouse disallowable. Why? Capital expenditure. As you are disallowing it in this place, you are adding it to your capital allowance. You are adding it to your, no, they already put it in brackets. What they put? Industrial building. So in this particular year of assessment, which year of assessment is 2020, the last year, when they got the industrial building, when you reach 2023 year of assessment, you are going to put cost, that 37, you add it to your capital allowance. Please, am I making sense? Ifeoluwa, what did my lecturer tell me about the question? I said my lecturer told me also to write reports, but personally, I prefer to follow instruction because I know the consequences of not following instruction at times. Okay, but what he also told me was he didn't tell you to write report, shall write report. That's what he told me. Me, I did not, though in my own question, at the tax you, audit, everybody was just asking for report. Even CR was asking for reports in my diet. I wrote report, tire. So that diet that they didn't ask for reports, I don't know. I don't know. I say that they are lucky. Because, wow. Okay, I think I've explained the capital allowance. Please, guys, promise me you do this capital allowance. You have to do it too. So next Sunday, we must finish this one. I can't tell whether we'll do question one or not. You guys, you
Sorry,
might have to practice it
I
by
have a
yourself.
question.
Oh yeah, ask.
Okay. This, sorry, the premises. Let's
Okay.
assume, okay, the renovation to premises. Let's assume
Yes.
that we disallow it. So meaning that we are going to add it in our capital allowance.
Yes.
Okay. Is it because
This
it's
repairs to premises. Assuming is renovation and we disallow it.
yes?
You add it to capital allowance.
Okay. Thank
It's
you.
not like you're adding this 900 to capital allowance. So you will treat it as
Yeah,
a
as a
new asset.
new asset. Good.
Yes. You bring it
Thank
in
you.
as cost, then you do initial allowance on it, annual allowance on it.
So this will only apply to asset.
Yes, because it's if you disallow it based on the fact that it is a capital expenditure, it will go to the
Okay.
asset side and it will enjoy capital allowance.
Okay. Thank you, sir. God bless you.
All right. So I guess this is where we draw the curtain for today, guys. You must do that. So I'm just saying you must do that capital allowance. You do it to we'll compare. Then if majority is wrong, we don't have to do it in class. If majority is right, I hope majority is right. You don't have to do it again. Okay, see you guys next class. Then you can attempt this question if you wish. So you come and see the way I'll do it and the way you've done it to compare. All right.
Thank
So
you.
after this question, you might need to move to capital gains tax immediately next Sunday. So we don't waste time. So see you guys.
Good night. Thank you.